Hi friends, good week. Vladimir here with you, and this is the weekly review for 22nd of August 2011. Well, the previous week was actually the beginning was very quiet. Only then, close to the end of the week, we saw some moves, and it looks like the market is waiting for Bernanke. Now, on this Thursday, as you can see, there is a beginning of Jackson Hole Symposium, right? And worldwide financial ministers will come, and all the economics people will come and have their speech. It's kind of G7 as we know it, right? Kind of. And all the eyes will be actually driven to Friday when Bernanke will have his speech. All the market is waiting for Bernanke. Will we have QE number 3? All the market actually believe that nothing can help the indices and all the rest of the market except Bernanke, and all the eyes will be there. Until then, I believe we'll see the volatility continuing, and let's take a look on the chart and see what might we have until it is all over. Let's begin with the Aussie against the New Zealandian. We've been discussing about it several times during the last 2 months, and we said that it is stopped on this channel, right? I just remind you here. It is stopped on this channel, trading channel, and should go up. If you pay attention, we have 1, 2, 3, 4, 5 moves on the downward, right? And we now probably will have to see 1, 2, and 3, or maybe even all the way up again for the lower boundary. Everything is possible, but at least we are going for the previous resistance, which also could take us higher for 20 MA. Now, this weekly chart finished with kind of, not exactly, but kind of Marubuzu, right? And the difference is small, and it should bring us some correction and up again. So let's take a look on the daily chart. What do we have? We have a close above our resistance, right? Any drawdown for this resistance around 126.70, maybe even a little higher, maybe even a little lower, around 126.40, 30. It's pretty much the same area. Should provide us RSI broke up, and stochastic try to reduce and up again, which means we are bullish. Now, any retrace down should provide a buy opportunity with stop loss below 20 MA and target on the previous high, which is, as you can see here, previous resistance around 128, little higher, 128, 128.20. That's the range. If this level is broken, then we are going all the way for next important resistance, which is around 129. And of course, the last one is a little above 130, which could take us once again to 20 MA or even higher. Now let's see how this pair we have. Anyway, we are bullish, and as I said, any retrace down should provide a buy opportunity with stop below 20 MA and profits on the first on the resistance, second on the next resistance, 128, 20, and 129. That's the range it should go. That's the first possible beautiful target. Now, New Zealandian dollar provided us the fourth down move, right? Up and down again. We have a kind of head and shoulders here. It's not the classical thing, but still it looks like we are going for the support area around 081. So stay bearish for this pair. This is the 4-hour charts, right? 4-hour chart, and it should continue. You can see 1, 2, now probably 3 move. It should play here and go down. Stop loss should be placed above this last high. Any retrace is a sell opportunity. Now, it's a little risky market, not risky as we have had 2 weeks ago, but still a little risky until Bernanke's many speculations will be there So just keep the small risk. That's very important nowadays. Now, if we take a look on the franc pairs, the pairs we discussed before, here what we have had a 4 hours wedge, right? We discussed about them on the previous weekly review, and now we probably go to test the support as we discussed, or maybe even deeper. Everything now is possible, but the main up move is pretty much clear. We can see that 20 MA now is a support. It used to be a resistance, it was broken, and now the pair is aiming for down move. It might be a little deeper, and then it should go and continue the up move. If based on the weekly chart, we can see that we still have plenty of rooms for 20 MA. Now, this is of course relevant for all the franc pairs. As you can see, euro franc, pound franc, Aussie franc, all based and just points the same things. Well, that's about the franc pairs. Still looks bearish for the correction, but it will stop on the support and retrace, and should retrace all the way up again to continue this move. So stay tuned for these pairs. For longer run, it looks like a very nice bullish call. Now, what about the gold? Well, it's an interesting story, the gold, because when it broke the weekly line here, right, and now creating the new high of MACD histogram, even higher than the previous high, as you can see the break here, right? Now, it's all very, very, very interesting. The gold will continue to be bullish because of the main reason for long term, not short term. Because of the main reason, as on Japan, the government is intervened right now. On Swiss, the government is intervened right now, and we can't actually expect any government intervene in the gold. No government can print gold, right, as they do with their money. No government can print and sell their gold or or their bonds on the gold, right? It's just impossible. And that's why it's the only last safe haven that is available for investors. Now, it's for the long term. I do believe we will go and continue up. I don't see nothing that can change this direction. We can see clear up on the chart, but I do believe it's like a ticking bomb which will be exploded any moment. If you take a look now, we are on critical situation on daily chart, as we have a histogram divergence, a stochastic divergence, and mainly important, which is RSI above 80 divergence. Now, I believe it's a ticking bomb, seriously. I think it's only a question of time until we have crashed down for at least $100, at least. Now, daily inverted hammer with this divergence should provide a job for at least 20 MA and probably even deeper. It will take time, and it's all short term. I think it will take days, maybe weeks, but for months and years forward, there is no question as for now about the gold. It's the only and the last safe haven, and it doesn't look like anyone gonna change it. Now, if we take a look on the euro dollar, you can see we don't have nothing. 145 is still amazing resistance, which is not broken. We can take a look on the pound. The pound makes interesting thing. It was blocked on the resistance, spiked it twice, and now made an inverted hammer. On the weekly chart, the divergence is still here, but it is confusing. Why? MACD divergence is here, stochastic divergence is here, but RSI is pointing up. How? It's very confusing, and I prefer just not touch these unclear pairs. Aussie dollar and Kiwi dollar looked like most interesting and should continue down. from my point of view, at least for another time for previous support. But it's very, 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 once again, risky market, as all the market is waiting for Bernanke. So I believe it's much clever to look opportunities for not on this kind of pairs that does not look clear. New Zealandian look very nice from my point of view. Aussie Kiwi looks very interesting from my point of view on the daily and the weekly chart. And the gold looks very interesting to follow. If you take a look on Euro Aussie, we have the forced up move. Now it looks like this pair wants to go up again, at least for the previous resistance. Right? The same, by the way, is about pound against the Aussie, but pound against the Aussie is a little different because it depends. Now it looks like it depends very much on pound, which makes very confusing situation. That's why I prefer to stuck with the Euro Aussie that should from here continue up during the next days. Well, that's technically, once again, that's all technical analysis, and now we all have just to take a look what is about to happen on the markets. I still think the interesting pairs will be Euro New Zealandian against the dollar. Probably the gold will talk this week. And the Swiss pair that we should complete their correction, as we explained, and continue down. Even on Euro Yen and the Pound Yen, you can see very confusing signs, which means leave it alone. Leave it alone. Euro Pound, interesting pair as well. We do have a bullish divergence here, as you can see, right? And we have another doji on weekly chart. Once again, very confusing, because this divergence could take us all the way up. It's a double bottom that takes us all the way up, but and the beautiful divergence, right? But from the weekly chart, it's a doji, and doji means it can always go down, break again, and go for lowest lows. Now this double bottom is interesting, but weird. From my point of view, it's a little weird. Technically, it should continue up, but from weekly chart, we don't have any confirmations yet. Plus, double doji. Double doji could be continuing or inverted pattern. So let's see how the market begins to understand better the direction. And that's all actually for this week, friends. The franc pairs, New Zealand and Aussie, Kiwi, and the gold. That should be very, 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 very interesting. A few words about the indices. I think we continuing down, and we will continue down unless Bernanke will have something for us. If you take a look on the daily chart, we have had 1, 2, 3, 4, and now we are probably doing 5 until this divergence will be created. Any retrace should provide a good sell opportunity. Once 1080 should be first target, 1000 should be the last target, and I believe we will go there all the way until Bernanke's speech, at least. The same spot about the Dow, of course. I believe we are going much lower. There are still plenty of room to go there. That's all, friends. We are in bearish market on the indices, and we should accept it. Don't fight it. It's still early to look for the end. Just enjoy it. And if you remember the stocks I have recommended to you, I've discussed about the IBM, as you remember, right? And that's what you have, friends. This divergence take affection, and here we are. We are going down. I discussed about HNP, right? HNP, and look what's happening with HNP. I discussed about Coca-Cola and Intel, right? This is Coca-Cola, and this is how it looks like. That's the down move we have had. Still no close below the line. Still no close below the line, right? So no more bearish moves. But here you go, the force down move, right? And here is Intel, for example. The same stuff. Look what happened with this divergence. So we are going down, friends, for many stocks. I hope you just enjoyed it as explained and recommended several weeks ago. Thank you very much for your time, friends, watching this video. I wish you a fantastic week, and let's see what Bernanke and the market will bring to us during this interesting week. Good luck, yours, Vladimir.